Hello, welcome to my channel today. This is the King's Tutor. It's the first time of joining us. Thank you for joining us. Ensure you like, comment, share, and subscribe to this channel. Okay, now today we want to continue with our series on accounting. Now I want to see this question, a very complicated question to some persons, but it's quite simple. Okay, now let's see what it means. The question said, if the rate of turnover of stock is represented by the letter K, and the formula for finding this rate is given as this, that is K equals X divided by Y plus Z divided by 2. What does letter X, Y, and Z stand for? That's the first question. The second one, the opening stock of a trader is given as 14,750 naira. His purchases less returns for the year amounts to 72,100 naira, and his closing stock is valued at 10,650 naira. Now find the rate of turnover of the stock. That's the second question. And the third one said, if the gross profit on turnover of the trader above is 20%, calculate the turnover of the trader for the year. Simple question, very simple, but quite complicating, sort of. Okay, so to solve this question, the question is kind of complicating, but it's very simple. Now it needs the knowledge of the stock turnover, markup, and margin. Okay, now we have done that before. If you have not seen the video, ensure you check up here. You will see the video. Okay, and if you're watching in probably the TikTok or in my Instagram, ensure you go to my YouTube to see videos on markup and margin. Now let's continue. And the question said, if the rate of turnover of stock is represented by the letter K, and the formula for finding this rate is this. Now they said, one thing you should note, they said the rate of turnover of stock is given as this. Now what does the letter X, Y, and Z stand for? Now the first thing you should know is, what is the formula for rate of stock turnover? Okay, now the rate of stock turnover, the formula for rate of stock turnover is given as cost of goods sold over average stock. Now this average stock is given as opening stock plus closing stock or inventory divided by 2. So once you know this is the rate of stock turnover formula, it is easier to identify. Now they ask us, what does X, Y, and Z stand for? Now they already told us that K stands for rate of stock turnover. Now X, what does X stand for? Now X is at the numerator. It means our X is cost of goods sold. Okay, so it means X is cost of goods sold. That is X. Now they said Y and Z. What does Y and Z stands for? If you check here, you see Y plus Z, and then add the divided by 2. So it means Y is opening stock, while Z is closing stock. Y is opening stock, while Z is what? Closing stock. Okay, so that is the first question. We have answered that. And the second one said, the opening stock of a trader is given as 14,750 naira. His purchases less return for the year amounts to 72,100 naira, and his closing stock is valued at this. Find the rate of turnover of the stock. Now they want us to now calculate it in financial terms, the rate of stock turnover. Okay, now if you notice in the question here, you will notice that the rate of stock turnover have cost of goods sold and average stock. And in this second question, it said the opening stock is this, and the purchases is this, 72,100 naira, and the closing stock is this. They did not give us cost of goods sold. It means we have to what? Find the cost of goods sold. Okay, now we have to find it. We are conversant with the final account. The cost of goods sold, the cost of goods sold will be given as opening stock plus purchases minus closing stock. That's cost of goods sold. Opening stock plus purchases minus cost of goods sold. Now, what's the opening stock? They said the opening stock is giving us 14,750. As 14,750 plus. Now, they say the purchases less return is 72,100 naira. So we have 72,100 naira minus, what's the closing stock? Closing stock is 10,650. 10,650. That's the closing stock. So if we do that, we have 14,750 plus 72,100 naira. 14,750 plus 72,100 naira minus 10,650. So we have 76,200. 76,200. Now this 76,200 is now the cost of goods sold. Now, but they're asking us to find the rate of stock turnover. So it will not be using the same formula. Okay. So our rate of stock turnover is equal to cost of goods. So what's cost of goods? So we have looked for it as 76,200 divided by average stock. Average stock is opening plus closing divided by 2. So we'll come here. What is opening stock? The opening stock is 14,750. 14,750 plus the closing stock is 10,650. 10,650 all divided by 2. Okay, so we have 76,200 divided by, now let's add this to 14,750 plus 10,650 divided by 2 will give us 12,700. So 76,200 divided by 12,700 will give us 6 times. Okay, so the rate of stock turnover is the number of times the trader sells his stock to get more stock from the market. Okay, so it is normally in what times or days. Okay, so the question said find the rate of stock turnover. So it is what? 6 times. Okay, now the next one is C. They said if the gross profit on turnover on the trader above is 20%, calculate the turnover of the trader for the year. Look at the question. If the gross profit on turnover, now they're talking about gross profit percentage. Now we have done that. That's why I said watch the markup and the margin video. They said if the gross profit on turnover of the trader above is 20%, calculate the turnover of the trader for the year. Now turnover is the same thing as sales. Okay, now they are telling us that if the gross profit on turnover of the trader is 20%, what is the turnover? Okay, now to solve this, like I said, you need a knowledge of markup and margin. Now, if you watch here, they say the gross profit on turnover is 20%. That's gross profit percentage, okay, which is margin. And margin is the relationship between the gross profit and sales. Now, they said, what is the turnover? Now, we cannot solve this question with margin because we are not giving turnover, which is sales. But we already have our cost of goods sold. So we can convert that margin to markup. Now, remember, we said markup is a relationship between the profit and the what cost price. We have done that. Check the video. Okay, relationship between the profit and what the cost price. Now, since we already have cost here, it will be easier. Okay, so it means we have to convert this. So they said the gross profit on turnover is 20%. Okay, it's 20%. So it is gross profit on sales, but we are not. We don't have sales. Let's convert this 20%. That's 20 over 100 is 1/5. Now we did converting margin to markup. We said when you are converting margin to markup, you deduct the numerator. Okay, so we will now have 1/5 minus 1, which is 1/4. So this 1/4 now is now markup, relationship between profit and the cost price. Okay, so we'll use that to get the question, which is what? The turnover. Now, from this now, since this is a markup, now we are going to solve. The markup is a relationship. The markup is the profit over the cost price, okay, or the cost. So since we already have the markup as 1 over 4, and it's 1 over 4 equal to, now the profit is not yet known. The profit is not yet known. That is what we used to get the sales. Now the cost price, this is the cost price, is the cost of goods sold, which is 76,200. 76,200. Now if we do this now, if we do this, we cross multiply, 4 times P will give us 4P equals this times 1 is 76,200. And to get P, which is the profit, we divide both sides by 4. So this cancels this. My P is a profit. So 76,200 divided by 4 will give us 19050. So my profit is 19050. Okay. So now in this now, the question they ask us is, what is the turnover of the trader? The turnover means sales. Okay. Now we know that our sales is the cost plus profit. Sales is cost plus what? Profit. So our cost, we have already looked for it before, which is 76,200 plus the profit is the one we did here. That is 19050. So our sales will be the same thing as turnover, will now be 76,200 plus 19050. And that will give us 95,250. So 95,250 is the actual turnover. Okay, so that's the actual turnover. Okay, so that is our question, and that is the solution. So if you have any question, ensure you leave it in the comment section below. And now, one of the ways I want to ensure that I interact with my viewers is to ensure that I ask questions, I give assignments at the end of each video. Okay, now we have started it. Now ensure you answer this. Leave it in the comment section below. Leave it in the comment section below. Leave it in the comment section below. Now the question is, that's an assignment. Okay, it said, which of the following concepts recognize the principle of double entry? Which of the following concepts recognize the principle of double entry? A, Akura concept. B, business entity. C, dual aspect. D, going concern. And E, realization. They say, which of the following concepts recognize the principle of double entry? A, Akura. B, business entity. C, dual aspect. D, going concern. And E, realization. Once, just answer the question either A, B, C, D, or A. Just drop it in the comment section, the option and the word that is attached to it. Then I'll reply you in the comment section. Ensure you answer that. Please ensure you like, comment, share, and subscribe to this channel. Now I want to recommend a video for you. That's the markup and the margin full video. Look at it here, this video. Ensure you watch it now. Okay, let's go watch it. Thank you very much.